Asian stock markets were mixed on Wednesday amid the lingering uncertainty over the U.S.-China trade negotiations. Washington expanded its trade blacklist to include some of China's top artificial intelligence firms, while China's Ministry of Commerce said the U.S. should stop interfering in the country's internal affairs. These developments clouded the outlook for the upcoming negotiations set to kick off today. As such, Shanghai Composite added 0.39%, Hong Kong's Hang Seng Index shed 0.61%, the Nikkei 225 in Japan slipped 0.61%, and in Australia, the S&P ASX 200 finished its trading day 0.71% lower. Overall, the MSCI Asia ex-Japan Index shed 0.58%. Markets in South Korea were closed on Wednesday for a holiday. Meanwhile, investor sentiment in Europe improved, with stocks closing higher on Wednesday after a report that Beijing is willing to discuss a partial trade deal with the U.S. The Pan-European Stock 600 closed 0.4% higher, with all sectors except utilities and retail were in positive territory. In Europe, UK Prime Minister Boris Johnson faced a potential mutiny from within his own cabinet over fears about a disorderly no-deal exit from the European Union. There were also reports that Johnson and his Irish counterpart Leo Varadkar had reiterated their mutual desire to agree to a Brexit deal before the October 31st deadline. U.S. stocks traded higher nearly across the board after a report that China is ready to accept a partial trade deal on the condition that Trump holds off on additional U.S. tariffs on Chinese products. However, the negotiators are not optimistic about reaching a broad deal that would end the trade conflict. The Dow climbed 181.97 points, or 0.70%, to close at 26,346.01. The S&P 500 gained 0.91% to end the day at 2,919.40. The Nasdaq Composite advanced 1.02% to 7,903.74. In other news, the FOMC meeting minutes showed that the Federal Reserve officials were more worried about the U.S. economy by the time they met in mid-September. Moreover, several Fed officials pointed to a rising probability of a recession. A few Fed officials pledged to be vigilant about the signs of a softening in the labor market. Also, FOMC members were divided about whether to cut the interest rates. They eventually agreed by a 7-3 vote to cut its benchmark rate by a quarter percentage point to range between 1.75% and 2%. That was the second straight meeting with a rate cut. Only two Fed officials wanted an aggressive half percentage point. The markets barely reacted to the minutes, however. The U.S. dollar index largely ignored the statement and stayed nearly flat on the day, marginally above 99 per handle. The euro-U.S. dollar finished higher on the day, but still failed to break above the 1.10 barrier due to a mixed and unsustainable risk sentiment in the global financial markets. Today, the ECB releases the minutes of its latest meeting, with the pair could come under a short-term downside pressure should the central bank express a dovish tone. Also, the U.S. CPI data will be important and could affect the U.S. dollar pairs. The Consumer Price Index is projected to rise 0.1% in September, the same in August. Annual inflation expected to be 1.8% following August's 1.7% increment. The core rate is estimated to gain 0.2% after a 0.3% rise in the previous month. Should the figures come in lower than expected, the greenback may come under a broad-based selling pressure amid rising expectations of another rate cut later this month. In this scenario, the euro-US dollar pair could finally regain the 1.10 level, but on the condition that the ECB minutes don't disappoint euro bulls. In commodities, Brent crude settled slightly lower on Wednesday, giving up earlier gains as the official EIA report revealed a fourth straight rise in domestic crude supplies, while FOMC minutes showed that Fed officials were more worried about the U.S. economy. The Energy Information Administration reported that U.S. crude supplies climbed for a fourth week in a row by 2.9 million barrels last week. They were forecast to increase by 2.4 million barrels. Moreover, production rose by 200,000 barrels a day to 12.6 million barrels a day, another all-time high. Against this backdrop, Brent slipped from $59.30 down to $58.30. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.